What in the world is happening to crypto? If you've looked at the charts recently, your heart probably skipped a beat. We're seeing one of the most dramatic shakeups this year, a perfect storm of panic, politics, and pure market mechanics. But buried beneath all that red, there are some unbelievably bullish signals that almost no one is talking about. In this video, we're breaking down the chaos, from the billion-dollar liquidations to the secret projects making power moves that could set them up for an insane run when the dust settles. Stick with me, because if you can understand what's happening right now, you'll be miles ahead of the crowd. Welcome back to the channel, your daily dose of crystal clear crypto news. We don't just read the headlines, we tear them apart to give you the why and the what's next. So let's not waste another second. The Great Liquidation. Why Bitcoin is getting hammered. Let's just state the obvious. The market is hurting. Bitcoin took a nosedive, crashing through key support levels that had held strong for months. We're talking about a drop that wiped out billions in market cap in a matter of hours. But this wasn't just a normal correction. This was a full-blown liquidation cascade. So what does that even mean? Imagine thousands of traders all using borrowed money to bet that the price would go up. That's called leverage. Now, when the price starts falling rapidly, their collateral isn't enough to cover their bets anymore, and their positions get automatically sold off by the exchanges. This forced selling pushes the price down even further, which triggers more liquidations. It's a brutal self-feeding cycle, and the numbers are staggering. In the last 24 hours alone, over $2 billion in leveraged positions have been liquidated. The vast majority of those were people betting on the price going up. They got wiped out. Bitcoin long saw nearly $400 million vanish into thin air. Ethereum wasn't far behind with over $300 million. It's a bloodbath for over-leveraged traders. But here's the critical question. What was the match that lit this fuse? The single biggest trigger appears to be the ongoing political drama and the record-breaking US government shutdown. Now you might be thinking, what does a government shutdown have to do with my crypto portfolio? The answer is everything. It's all about market liquidity. A functioning government is constantly spending money from its treasury account, which injects cash liquidity into the financial system. That liquidity is like rocket fuel for risk on assets like tech stocks and crypto. Right now, with the government in a stalemate, that fuel line has been cut off. The expected flow of money has stalled, and the market is throwing a tantrum. Why this matters? This proves that crypto, especially Bitcoin, is no longer in its own isolated bubble. It's deeply intertwined with the global macroeconomic landscape. When traditional finance catches a cold, crypto can now get the flu. The break of major support levels is a severe technical blow, and it tells us that the market is reacting to a bigger, scarier story, a potential liquidity crunch. Altcoins in the crossfire, the good, the bad, and the ugly. Now, if Bitcoin is getting hammered, you can imagine what's happening in the altcoin space. It's an absolute massacre. The old saying holds true: when Bitcoin sneezes, altcoins catch pneumonia. Major players like Solana, Dogecoin, and Avalanche have seen devastating double-digit percentage drops. This happens because altcoins generally have lower liquidity and higher volatility. When fear hits the market, investors don't stick around to see if their favorite small-cap project has a great team or a solid roadmap. They flee to safety, and they sell their altcoins first. The result is a chart that looks like a cliff. But here's where it gets really interesting. Even in all this chaos, we're seeing the early signs of a flight to quality. Look at the data. While altcoins were getting crushed, Bitcoin's market dominance, its share of the total crypto market, actually inched higher. It's a small move, but a powerful one. What does that signal? It suggests that in moments of extreme panic, investors still view Bitcoin as the digital gold of the crypto world. They aren't necessarily cashing out into dollars. Many are moving within the crypto ecosystem, swapping their riskier altcoins for the relative safety of Bitcoin. They're moving from the experimental high-risk projects back to the foundational asset. Why this matters? For any altcoin investor, this is brutal. Periods like this are a stress test that separates the truly resilient projects with strong fundamentals and dedicated communities from the ones that were purely built on hype. A flight to quality means that when the recovery eventually comes, Bitcoin will likely lead the charge, and only the strongest altcoins will follow. The hidden bull market, deflationary moves you can't ignore. All right, let's shift gears. I told you there was a bullish story hidden underneath all this panic, and this is it. While everyone is staring at the red candles, some of the biggest and smartest projects in our space are making incredibly powerful, long-term moves. They are fundamentally changing their tokenomics to set themselves up for massive success, and it's going almost completely unnoticed. Let me hit you with some of the most exciting updates that dropped right in the middle of this crash. First up, Internet Computer ICP, the DFINITY Foundation, just announced a massive overhaul. They're planning to drastically reduce the project's inflationary pressure. How? By shortening the minimum lockup period for staking to attract more participants. And even cooler, they're launching a new system where a cloud engine will direct 80% of its income to node providers and get this burn the other 20%. That's a built-in permanent deflationary mechanism. Next, ZKsync. In a move of sheer confidence, the founders have proposed a landmark token update. They want to use all of the network's future revenue to buy back and burn ZK tokens. Let that sink in. Every fee paid to use the network would directly create buying pressure for the token. This aligns the success of the ecosystem perfectly with the value of the asset. And then there's Jupiter, the king of the Solana decentralized exchanges. Their community just voted to burn a staggering 130 million JUP tokens from a community wallet. That represents about 4% of the entire circulating supply. Removing that much supply from the market is what we call a supply shock. It's a fundamentally bullish action that puts upward pressure on the price long term. Finally, the lending giant Aave is thinking like a Fortune 500 company. Their DAO just approved a proposal for a permanent treasury buyback program. They are allocating a whopping $50 million per year to continuously buy back and burn their token. This isn't a one-time event, it's a perpetual engine of value creation. Why this matters? This is a sign of a maturing market. We've moved past the era of empty promises. Projects are now implementing sophisticated, real-world economic strategies like share buybacks, but in a decentralized, on-chain way. They are actively fighting inflation and creating sustainable value for their holders. While weak hands are selling in a panic, these projects are building the foundation for the next parabolic bull run. Institutional hands are still playing, Grayscale and Standard Chartered. Now let's talk about the big money. You might think that with prices down, the institutions would be running for the hills. But the data and the headlines tell a completely different story. The smart money is using this dip to build infrastructure and position themselves for the future. First, a shocker from the world of meme coins. Grayscale, the asset management titan behind the first Bitcoin ETF, just added Shiba Inu, SHIB, to its list of assets being considered for a future ETF. Now hold on, this does not mean a SHIB ETF is launching tomorrow, but what it does mean is monumental. It means one of the most respected names in traditional finance has officially recognized SHIB as an asset with sufficient size, liquidity, and market interest to be worthy of evaluation. This is a huge step towards legitimacy for the entire meme coin sector. It opens the door, even if just a crack, for institutional level capital to eventually flow into assets that were once considered pure jokes. It's a signal that the walls between traditional finance and the Wild West of crypto are continuing to crumble. Speaking of institutions, the global banking behemoth Standard Chartered just made a massive announcement. They confirmed they will be launching Bitcoin and Ethereum custody services in Hong Kong next year. Think about the significance of that. This isn't a crypto startup. This is a 160-year-old, systemically important bank. They are formally offering to safeguard digital assets for their massive, deep-pocketed clients in one of the world's most crucial financial hubs. So there you have it, a market caught in a perfect storm, shaken by macro fears and a liquidation cascade, but simultaneously being strengthened from within by revolutionary tokenomics and unwavering institutional commitment. This is the duality of crypto, the wild volatility on the surface and the relentless, bullish innovation happening underneath. And most importantly, if you haven't already, subscribe to the channel and tap that notification bell. We break down the complex world of crypto into simple, actionable insights every single day. And you don't want to miss what we've got coming next.